Hello student, we are in the part 3 of journal entries. A few more sample transactions and their journal entries will be discussed. Let's go to the sample transactions. First transaction, Hari, who owed us rupees 10,000, became insolvent. Hari is a debtor to the business. He owes the business rupees 10,000. Now from the transaction it is clear that Hari has become insolvent and will not be able to pay the business the amount due from him, which is rupees 10,000. Now this rupees 10,000 is irrecoverable. Whenever an amount is irrecoverable, we need to debit it to bad debts account. Bad debts account debit 10,000 rupees to Hari account 10,000 rupees for writing off as bad debts. Second transaction, Hari, who owed us rupees 10,000, became insolvent. Official receiver gave us 20 paise in a rupee. Now Hari is a debtor to the business and he owes us 10,000 and he's become insolvent. But however, the official receiver appointed by the government to realize the assets of Hari has intimated that he can pay 20 paise in a rupee from Hari's estate. So for 1 rupee, if it's 20 paise, then for 10,000 rupees it's how much? We do this 10,000 into 20 paise for 100 paise. For 100 paise, if you are able to get 20 paise, therefore for 10,000 rupees, we will receive in cash 2,000 rupees. The bad debts amount is 10,000 minus the 2,000 rupees, 8,000 rupees to Hari account 10,000 rupees for Hari becoming insolvent. Third transaction, Hari, whose debt was written off as bad in the previous year, gave rupees 5,000. So now Hari's account was written off as bad debts in the previous year. Now he is giving us rupees 5,000. Now once the debtor's account is written off as bad, the debtor account will not again figure in the journal entry, even if he gives us the amount which has earlier been written off as bad. So we will debit cash account with 5,000 rupees and we'll credit to bad debts recovered account. ₹5,000. Narration for bad debts recovered. Fourth transaction, goods taken for personal use is 10,000 rupees. It's taken for personal use, so we debit drawings account. The item which is taken for personal use is goods, so we need to credit purchases account. For goods taken for personal use. Fifth transaction, goods given as charity is rupees 2,000. we'll debit charity account, and goods are used as charity, so we credit purchases account. Whenever goods are used for other purposes, we have to credit purchases account for goods given as charity. Sixth transaction, goods distributed as free samples, rupees 4,000. We need to debit free samples account or advertisement account. And since goods are distributed as free samples, we need to credit purchases account. For goods distributed as free samples. Seventh transaction, goods used for making or repairing furniture, rupees 1,000. We need to debit the asset furniture and credit purchases since goods are used for repairing the asset. Narration, goods used for making or repairing asset, which is furniture. Eighth transaction, goods of rupees 10,000 lost by theft or fire. Goods were uninsured. The first journal entry is loss of goods by fire. To purchases account, 10,000 for goods lost by fire. Now the goods are uninsured, so the entire loss has to be borne by the business. The loss will be debited to P&L account. So P&L account to loss of goods by fire. ₹10,000 will be transferred to the P&L account for transfer of loss to P&L account. Ninth transaction, goods rupees 10,000 lost by theft or fire. The goods were insured and the insurance company admitted the full claim. So the first journal entry, loss of goods by fire, account debit 10,000 to purchases account 10,000 for loss of goods by fire. The next entry will be insurance claim account debit to loss of goods by fire. For goods being insured. And whenever the amount of the claim is received, we debit bank account with 10,000 to insurance claim account. The entire claim has been admitted. For claim received. The 10th transaction, goods of rupees 10,000 lost by theft or fire. Goods were insured and insurance company admitted a claim of 6,000 rupees. So the first entry is loss of goods by fire. To purchases account. For loss of goods by fire. The next entry is insurance claim account debit. $10,000 to loss of goods by fire. $10,000 goods insured. And when we receive the claim, the insurance company has admitted a claim of 6,000 rupees. So bank account debit 6,000 rupees. The profit and loss account will be debited with the loss, which is 10,000 minus 6,000, 4,000, and to insurance claim 10,000 rupees for claim of rupees 6,000 admitted.
Eleventh transaction, purchase of machinery rupees 2 lakh. Machinery account debit. To cash account 2 lakh rupees for purchase of machinery. Twelfth transaction, paid wages on installation of machinery rupees 20,000. Now, whenever any expense is incurred on installation of machinery, the same should be capitalized, which means it has to be added to the cost of the machinery. To do so, we debit machinery account again with 20,000 rupees and credit cash account with 20,000 rupees for wages paid on installation of machinery. Thirteenth transaction, incurred rupees 5,000 on repairs to machinery. This will not be added to the cost of the machinery. This amount will not be capitalized because repairs are annual costs incurred on the machinery. For repairs to machinery. Fourteenth transaction, income tax paid is rupees 3 lakh. Now when income tax of the proprietor is paid by using the business funds, it is money used for personal purpose. So we debit drawings account. ₹3 lakh to bank account 3 lakh for income tax paid. The 15th transaction, proprietor paid rupees 1 lakh as life insurance premium. Again, the business funds are used for paying the life insurance premium of the proprietor. So, it's drawings account. To cash account. For paying premium of proprietor. So we saw sample journal entries for a few transactions. In the upcoming video, we will see a few more journal entries.